Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for what I call the beginning of the trade season. It is September 4th, first trading day of September 2018, just getting on to 2 p.m. Central Daylight Time. I'm doing this tape obviously 2 hours before the market ends trading, but the settlement prices are in and they're right in this area. The market hasn't moved very much. Now, part of the problem for the copper market is China. Slow down there, still no deal with the U.S., lots of tough talk. Ending September 5th is the public commentary period for the next $200 billion round of tariffs the president could pop on at midnight that day or the next day or whatever day he wants now. So we'll see what he's going to do. Gold market throughout a minor sell signal as I define it, and I'll show it to you in our video here. On Friday, it's getting some follow-through from that. The dollar index rallied smartly. Now, it's given up a big chunk of the day's gains. It's up 30 on the day, and it was 30 higher than this at 95.68. And the stock market is all lower today in the red at the same time. Energy markets, gasoline down. I would be surprised if when you got up today to that 206 whatever level, if the market just didn't get a bunch of profit takers in there and saying, hey, Labor Day's over. How are you going to get more demand, fewer people driving? We'll see if I'm right or wrong. Crude oil market under a little pressure here. At first, the market got a good bid because there's a, I forgot the name of the hurricane that's going there, but it's on its way. Is it Daniel? It's something, one of those names. I'm not sure. When we take a look at the gold and the weekly chart of closes, you can see you went from $13.53 to $11.61.40, and at current prices, you're about $30 over that. When you look at the chart action, you can see how you worked your way up and suddenly you're stepping your way down again with a pattern of lower highs as measured by the swing line study and lower lows. That's not bullish, that's bearish. The market is under the 18-day average of closes. That is bearish because when markets are under the 18-day average, I say the bias is down. When it's over, the market has bullish bias. When you're under the market, the resistance becomes the 18-day average of closes. So on the way back up, that would be it. And if you take a look here, once you were over the upper, the 18-day average, the bias was up, support should be the 18-day average. Now with today's action, you had an outside day down on Friday. I'm sorry, that was Thursday. Watch. Now you drop back down. So that puts the market into a downtrend. Where might support be? Well, for that, I take a look at Bollinger Bands. And the Bollinger Band says the support could be 1180.20. What would be disheartening to me would be taking out the 1189.50 because this pattern of an up, a correction, and then moving higher is what we call a price count setup. And that set up an objective here into the 1230s. That's not knocked out unless you take out 1189.50. Take that out, nah, you wipe that out, and then the downtrend stays intact. So something you have to be concerned of. And you could be even getting downside price counts if you get that follow through. You would use this high to that low and then get a series of lower counts. What about momentum? Turning down as well. So the bears have control of the market. The first goal is 1180.20 with resistance at 1220 at 1202.70, and what you don't want to take out if you're a bear is the 1214 level. If you do, and you don't take out that 1189.50, this would become noise and the market could turn bullish. Take out 1189.50, the game changes. When you take a look at the GLD ETF, the market's now got a pattern of lower highs, lower lows. Now, the settlement has not been determined here. You still have another hour to go in this market, but if it closes under 113.21, it would be bearish. You'd have downside bias, momentum is turned down, and the trend line, as defined by the swing lines, would be down. When we come to GDX, the miners, this was nothing but a bear market rally. You've made a new low under that low, the market is still very much in the bear camp. It is not a trending market in the sense that you have a higher high and a lower low, but the bias is down and you are very oversold at this point. So far, the numbers are not trying to switch from being oversold to embedding, which means converting to an even more bear pattern. For those of you that are regulars and watch me, one of the things I've been pointing out is this particular pattern is not conducive to a metal bottom. Often, I'm not going to use the word always because it's not accurate. Often, if you go back and study, metal bottoms do not come in with gold losing to silver. And this is what's happening. You now need 84 ounces of silver to get an ounce of gold. I view that as the China situation. China's going to use less silver if it loses the American market. Imagine $200 billion worth of tariffs. Let's assume the president goes somewhere between 10 and 25%. I haven't heard what he's thinking of doing. It could be a mixture. It could be anything he decides to do. But that should take some demand away from those goods, and the market's anticipating it. It's also the reason copper got hit so hard today. So as traders came back from their holidays in Europe and their summer vacations, a lot of people are just saying, you know, it's tomorrow is the day that the commentary ends. If the president wants, come Thursday, he can put on these tariffs. Market's not going to stand idle. It's not a bullish factor, right? In the platinum, lower highs, lower lows, momentum down, bias down, 765 a potential target. The market that is still the friendliest has been the palladium market, and it still very much has the pattern of higher lows, higher highs. However, you have an outside day down, which means you made the highest high, you closed lower. It's also a key reversal down. Fits into both. Support became the 100-day average, which you hit. You bounced away from that $20 today, but in order to say that the market's a trap for those thinking that the market ran out of its top or made a top today, you have to take out today's high again. So I'd be watching that. What else do I look at? Until the slow stochastic is lost, the market is saying that on pullbacks, the pros are in there still buying this market. Then I look at the U.S. dollar. Now, as I've taught you and you've heard me say before, when a market is oversold, it can either correct its oversold condition by correcting to the upside or embedding. Embedding means you take the slow stochastics and both numbers get under 20 for several days in a row. Well, it certainly didn't do it there. Both numbers under 20, then they're back over 20, one of them, and they're over it. When that occurs, in order to correct, you generally rally. What's one of the targets on a rally? The 18-day average of closes, or the closest of the 100-day average. Because this is above the market, the 18, and the 100's below it, it becomes the 18. Look where it went today and where the market stalled out. I teach this and other ideas as part of a library. I'm putting together a series of technical tools that I'll be recording now right through the end of the year. Pivot points is the first one, and many of you have it, others don't. But it'd be a good thing for you to get as I'm starting to record tomorrow other different parts for your library. And with them, I'll teach you different trading techniques that traders employ. These will not be taught in my charting course. They're separate and away from it. My charting course builds different things on each other. What these particular videos are going to do, first they're going to teach you a formula. And a lot of this is for in and out trading, not swing trading as I call it, or mini position trading. I'm not a trader that says, let's buy here and 2 years from now the market will be up at some number. It'd be wonderful if you could do it. The problem in futures is the leverage works against you because it's 10% leverage. To learn about the formula, how to apply it on the charts, how you use it, I've put together a 3-part video series that is yours to look at. Simply give us a call, and/or you can go to our website for the Pivot Point series, sign up for it. We'll mail you everything that you need so you can view it. Click up here if you're watching me on YouTube. It'll take you right there as well. I'm Ira Epstein. You have yourselves a great day, and I will talk to you all tomorrow. Take care now.